So, welcome to this presentation about what do financial statements tell you. Now here we have an actual example of a financial statement, and the question is, what are we looking at here? Well, what do we see? We see assets, liabilities, shareholder equity. It looks like a balance sheet, and that's what it is. So just for your information, consolidated statement of financial position is a nice long way of saying balance sheet. Now, what does it show? Well, it shows basically the assets, liabilities, and the equity. And that means what does the company own? Those are the assets. That's the asset side here. And what does it owe? That's the liability side here. Shareholders' equity is basically, from the company's point of view, what it owes the owners. So that's what's basically left over when you remove the liabilities from the assets. What kind of business could this be? Well, what can we see here? It's a bit hard to tell, isn't it? So there's not really enough information. We can see that there are inventories, but a lot of businesses have inventories and accounts receivable. So it doesn't tell you enough. Did the business earn money last year? Well, there is an answer to this. It did earn money, but it's not that immediately obvious. Once you get into some more detail, you would be able to see it. But it's not immediately obvious. A balance sheet is not normally what we look or go to figure out the profitability of a company. How much is the business worth? Well, the balance sheet tells us the book value of a company, but the actual valuation is something you deal with later. It's not what we look at, because when we have some things here, I'll give you the best example is probably this property, plant, and equipment. The numbers that are there are not necessarily the market values or the resale values of these assets. So that's why the balance sheet will not tell you really the value of a company. It will provide some form of value, but not in the sense of how much would you sell the company for. Now here, what are we looking at? Well, I think it should be relatively quick to see. The first word there is revenue. So we're looking at an income statement. Now, what does it show? Well, it shows revenues and expenses. And then the difference between the two is the profit or the income. What kind of business could this be? Now we have a little bit of an idea, but not that much yet. Okay, we can see some service revenues. As you can see, it talks about equipment rental here. There's something called product support, and in fact, that's the largest form and the largest amount of the revenue. So we're looking at something that's more involved with services, it seems. Did the business earn money last year? Well, now we can see it a bit, right? The answer is yes, because the net income is the amount of money that was earned. So the last 2 years, the company has earned money. How much is this business worth? Well, we still don't have what we need, but the income statements gives us a little bit more information about the value, because you know that if you're going to sell a business or buy a business, you're interested in how much money it's earning. To be more specific, you want to know how much it will earn in the future, but how much it's earned in the past gives you a good idea. So you still need a little bit more information, but this gives us a little bit more insight into how much value the business has. Is there anything else? Well, there are a few things on this page. As we can see, net income increased by a little bit, 4.3%. Basically, it went up from 232 to 242. We can also see that the earnings per share, that's for those who own shares in the company, they increased by 7.25% from 1.38 to 1.48. So it does give us that kind of information. There are more details, and normally the more you look into these things, there are more questions that you'll have, but at least you'll get more and more insight. So the most obvious one that I'm pointing out here is the fact that you'll see the taxes went down from 115 to 76. However, the earnings went up, even on a post-tax basis. So that's a little bit different, let's just say. Now, regarding this, what are we looking at here? As you may guess, it's a cash flow statement. So what does it show? Well, it shows, you'll see three big headings. Those are the operating, the investing, and the financing activities. So those are the main headings or subheadings of a cash flow statement. What kind of business could this be? Again, a confirmation. We knew we were looking at something a bit involved with services. Here you see again, we have something to do with one part of the service is rental equipment, because the company has disposed some rental equipment. As you know, that was not even the largest part of the business, but we clearly are in some form of a service business. Anything else? Well, you can compare investments and depreciation and all these other things. There's a lot of information in here, but again, this is later analysis. We're just introducing these financial statements here to give you an idea what you can see in here. You may also notice that there are some changes here. The operating activities, there's a change in the cash flows here from 2018 to 2019, how much they went down. And here we have investing activities that also were negative, but they went further down. And that means there's cash outflows. And then here we have the financing activities, which went up. They were negative 107 and they went up to 23. But again, that's for future analysis. Now, I'm just going to quickly talk about some of the other things that can be read from financial statements. First of all, a statement of comprehensive income that's included under International Financial Reporting Standards. And here we see that statement. It starts talking about net income. That's where we started, the 232 and the 242. And here are some other adjustments. There's a statement of shareholders' equity, which is one of the four major ones. I haven't talked about it yet because it goes into a little bit more detail than your standard, let's say, the standard business student would be dealing with, at least as an introductory level. But this is what it looks like, and it's a statement of shareholders' equity. It tells you a little bit about movement and how did the equity get from last year's amount to this year's amount. So that's where you see the balance starting in January 1, 2018 to December 31, 2018 to then December 31, 2019. So you're looking at 2 years of movement here. Notes are very important to financial statements. Here's an example of one of the notes. This is note 25, supplemental cash flow information, and it tells you about some changes in operating assets and liabilities, and we see them down here. This is a continuation of note 25. Okay, and again, it shows the changes so that we can go from 1 year to the next year, and it's breaking things down from short-term, long-term debt to lease liabilities. This has to do with that aspect of the financial reporting standards for capital leases and all that. Okay. That's all for this presentation. I hope it was helpful, and thank you for your attention.